Good morning, guys. Welcome to another full transparency trading session where it is time to redraw our charts. So we are going to go ahead and right click on here. First, we're going to click on these alert clock here, click on the three dots, click stop all, and then we're going to click yes to stopping all. You're going to click it one more time, click remove all inactives, and that's going to remove all your inactive ones. Then we're going to go here, back to our watch list, right click on the screen and go down to remove drawings. That takes off everything that we drew up ourselves. And then after that, we're just going to go single screen because we're going to start from scratch. First, we're going to start over on SPY. SPY is at 607.44 currently, meaning that it's probably going to pull it down towards its gap, which is about right here at 605.50. And then another one right here at 604.97, which is just before 605. So that's what we're looking for. Now, the touch that we want from SPY is for it to come down and touch 604.23. So those are the three areas that we mark out on SPY. Take our line there, draw it straight across. You guys know how we do. Go to the 4-hour time frame. Now, the area that we're looking for SPY to go to is 610. We actually don't need the line that long. We've only been this high for like a day. The area that we're looking for SPY to go to is 610. It's a nice psychological level for it to reject from. It could break 610 and wick up to like 612 or something like that. That would just be like a manipulation to the upside. But we're so close to 608, which we've hit already. 610 being right here. Put that there. And that's the point that we're reaching for. We also want a reminder a few points before it, like right here. 609, let's say 16. Just to let us know that we're going up there. But that looks to be the place they're looking to get to. If you zoom out and look at this from like a much smaller scale, we can remove these drawings as well. Don't need those. Look at that thing. Created like this little W pattern, shot up, created a mess, went up some more. Currently sitting towards a high, pulling back. So we're probably going to pull it back into this little gap here, about 605. And then that should give us the ability to go up to the 610. If they decide to just run the 610, that'll be amazing, but unlikely. Now let's go over to ES, which is stock that we trade. This is for the options traders. All right, so you'll notice the difference really quickly if I put up two screens side by side, one with SPY and one with ES. You'll notice that SPY has these gap ups, right? Where it jumps. Well, ES will have like a smaller version of them here and there. SPY has massive ones because SPY jumps up a lot. ES doesn't tend to jump up because it runs the entire time. So you'll see all of these massive gaps and imbalances that are left behind on SPY, whereas ES runs all night long, so it doesn't make those same gaps. So that's why you see the gaps when you get up on SPY. You don't see them on ES. We're looking like we're pulling back to my entry here. That'll get me about, let me see, $550 or $650. All right, close that out. But that's not what we're talking about right now. That's just a trade that I'm looking at for later this morning. At some point in time, we're going to pull back, so I'm prepared for that. And what we're looking for is to set up the level. So we're going to go back to a single screen. We're going to go to our 4-hour time frame. We're going to refresh this. And then we're going to click this plus sign, and we're going to zoom in on just this area here. Okay. So we're going to start with this. We're going to put a notification right there. Create that. And we're going to drag this blue line all the way across the current days. Then we're going to put one right here. Create that. Take another trend line. Draw it through those days. We're going to put one right here as an area of support. Take another trend line that used to be resistance, it's now support. Draw it through those days, and notice touching. It would just immediately, once you do that, you'll start to see a lot of touching. Take one more here because we want the lowest areas as well. Drag that through. And then our last one's going to be here. This is going to be our actual demand zone. Alert there. We're going to drop our main demand zone here. Take it from the white line just to the bottom of the wicks. Stretch it on across right there. And this is going to be our main demand zone. Now you're going to go to the current day. Click in this here. Takes it just across. Slide the screen over like this some. Just drag this thing out to the future. Same thing with these lines. Drag them out to the future. Drag them out to the future so they're always here because this is our new range. This is the new higher area that we're at. It's going to be a while before we fall back down into that lower area, if at all. But this will be the floor of our new range. And as you take it sideways like this, you'll see that it used to be resistance. We wicked through it one time. It was support, and it's been support ever since. There we go, right there. So that's our main demand zone. So now we're gonna start to go up, mark out some other levels. This is another level right here where we need to mark out. And you see how it was supporting here. It runs straight through just like the other levels. Click there. Drag it out to forever into the new year. That'll take us to January 16. All right, we need to find some other important levels. So we've got lots of support and resistance in here. All right, so we got these candles. These 3 candles right here are very important. We're gonna draw them out. So now we're starting to work on just this area here. So we can scoot it over a little bit. Line through there. And then start to take a look at that. Look, we were resistant, it's support, it's support, it's support, it's support right here, and the support that sent us way higher too. So that's an important area. Mark out another important area. Just areas where you see equal highs and equal lows that stand out. Doesn't have to be every single one, but you need the ones that really stand out, that make very large candles in very large areas that we seem to bounce off of and reject off of. Beautiful. Touch right there, touch right there, touch right here. Cuts that in half before the push up. So this is the breakout. This is when it's support. This is when it's resistance. This is when it's support again. Now these wicks that match right here with the bottom of this candle, I want those as well. At 59.60, that's an important area that we can bounce off of. And the key is just to draw out areas that you can bounce off of or have strong reactions off of. Right here, these 3, want those. You saw 3 times we were banging up against it before we randomly gapped up. I want that area. You draw it through, and then you look back to the left and you're gonna see there's some confirmation. It was support here, it was support here, it was support here, what we broke out right there. Okay, so now you're looking at these right here. That's a strong level, 608. I want that as well. On these smaller time frames, you're not gonna see all these lines like you see on the big time frame. But the reason that I do this is because it's easier than having 3 screens up, just marking out where the important areas are. So add alert there. In that jumbled mess, draw a line, take it all the way across. Notice resistance, 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 resistance. All of that resistance we broke through, came back down, it was still resistance, pushed all the way down here to this area, which I'll mark out too. Breaking the page, support, 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 wick down to where? The blue line here. All right, cool, we're still moving. Moving and grooving, gang, moving and grooving. Take right here, add alert line there. That was a strong area of resistance. It is now an area of support. And you'll see it. Look, we came down to where? What day was this? This was the December 3rd, Tuesday. We came down to that line of support, and then we went higher. So Tuesday, we came down to the line, went higher. So next up, area of resistance. Zoom in on just this little area here, because this is where we're currently working. Bodies of the candles on the 4-hour, we'll put an alert there. Bodies of the candles tend to be where the actual level is. The wick of the candle tends to be the manipulation. And by manipulation, we mean like humans that we work in the market, we have the ability to push things down. We'll start with this page break right here where the 2 candles meet. And we'll draw that out, stretch that out to the future. And then we'll come down to the body of the candles here, because again, the body of the candle is the true level. And the wick of the candle tends to be the manipulation. It's where we, retail traders are forcing their money in and stuff like that, pushing a little bit further than it would normally go. But look, it was resistance. Now it's support. Support here, starting to push up. All right, next, we're gonna hit this area right here because it's obvious. Draw a line through that. Hit all the obvious areas. You don't have to take too much time doing this. Just hit the ones that are obvious. Now you can start to hit the breaks in between these candles. Once it starts to run up like that, you're just looking for the breaks in between the candles as the candles are doing their run up. So all these points of interest will make nice trades. That's too close. This one's actual. You can also do this by just clicking the plus sign here and adding your alert that way. Okay, so we're coming down towards my point of entry right here. You guys can see we're pulling back towards where I want to get in. So hopefully we can get in there. We have a small risk. Honestly, we should make it about 175. We'll make it about 175 for now, and then we'll go off of that later on. So 175 is just about 7 ticks. Normally I do 12, but we're not gonna risk 300 for this trade. It's a very small account. This is a 25K account, so you always keep your risk a little tighter. And what's next? So this imbalance here where I have my entry, I want it right at that imbalance, and that should be another level. So now we don't even have to go all the way over. Undo that, click it again. Okay, so that imbalance should be a nice area for us to bounce up from. And then, of course, our high. This is a $6 range. I don't want to do the whole $6 range. It's my supply zone. So what we're going to do is our supply zone is we're just going to draw this here at 102. Click on this and go up from there to about 104. And we'll just leave this in place until we actually break it. So this is our supply zone. We're going to go to a smaller time frame to find out where we should actually have it. All right, cool. Smaller time frame says that we should bring it down. And cancel this. Smaller time frame says to bring it down right here and then to stretch it to the top. And that is our supply. And this is our current supply zone. This is what we're reaching for currently. I like that we're almost to my entry. And then my entry to the supply zone would get us about 725. So we're going to lock that there as our point to exit the trade. I don't believe we get to the top of it just yet. Not starting out anyway. If we get into it, probably go negative about $50. And then we should be able to climb back up to that. So 725 is a great trade. It's still 3 times the amount. It's actually about 4 times the amount. Plus 1. So it's a 4-to-1 trade still. But it was expected that we would come down a little bit. But that's pretty much it, guys. You got a couple more areas on the 1 hour time frame that you want to go back and draw out since you already did the 4. I never put my lines in. Let me put my lines in. Don't forget to do that. That's pretty important. Putting the lines in is pretty important. Want all these little levels drawn out. Don't turn blue yet. Come on down and get me into my trade, and then you can turn blue. There's a wick right here. Bodies of the candles right here. Notice how that's so much longer. Just click the plus sign and drag it up. It's faster. Plus sign's always going to be on the right hand side of the screen. All right, now we're going to go down to 1 hour. We're going to mark out a couple of things just real quick. Go ahead and refresh the page here. Notice you've got a lot of lines on there. But on the 1, we just need to mark out a few important areas. Starting here and going to this point. All right, for starters, there's consolidation there. Mark that out. There's a level here that you don't have on the 4 hour. Mark that out. The wicks, we're actually going to hit those. Mark those out. Notice that I'm going through real quick because I can see it fast. You just need to see it immediately. There's a support level right here on the 1 hour point of interest. Mark that out. There's a 1 hour point of interest right here. Mark it out. 1 hour point of interest right here. Mark it out. You can't see that on the 4 hour time frame, but that's going to be an area that you're going to have a strong reaction off of. Point of interest right here on the 1 hour. Mark that out. Okay. Now, blue line. Real quick, like, click, take it across. Click, take it across. Once you get good at this, you can do this super fast. Like, I can do this much faster than I'm showing you guys, but I'm showing you guys at a speed where you can follow. But I can do this at breakneck pace. This is super duper easy at this point because this is what I do every single time the market changes and I break it down. I come in here and I draw out my levels. And you start to see over and over again that patterns form and happen all the time. I just broke 1 level higher. Okay, so now we're above my blue line, heading for the top. So we almost came down to where I can enter the trade, but we did not get me in. And on this level, this is a 1 hour point of interest right there. So my entry is a point of interest. It's just not there yet. Okay, any other lines we need to draw here? And the 1 hour 200 EMA is important because eventually we're going to hit that. And that's going to send us up as well. So I will mark that out as well. Where it currently is and where it's more than likely going to go. And that's perfectly in line with this support over here. That used to be resistance. So this used to be resistance, now it's support. Same thing here, you bring that over there. And this will denote areas that the wick will probably come down to as well. Let's go up, see if we can find any more. We got to mark this one out still. All right, so that is a good area there. This right here is a good area that we're missing. This is an area that we're definitely missing. I know it seems like a lot, but it's painting a very clear picture for you. That's it for the video, guys. That's how I go back and draw up my 4-hour time frame. Then I go down to 15 minutes and I zoom in and I'm taking trades off just these levels here. It's coming through, it's tapping, it's showing me places to enter. This is an entry right here. This is a place of support down here. Go to the 5-minute time frame, you'll see less blue lines, more points of entry. So you see less blue lines the lower you go. And you start to see more entries, more places to get in, more places to get into trades. Modify that. Then you go to the 1-minute time frame and you see a lot less. And that is why I do it like this on the 1-minute time frames where I trade. So I'm only seeing 1, 2, 3, 4, 5, 6 lines, but it's showing me great entries, great places to get into trades on the 1-minute time frame. If I refresh and go even smaller, actually if I refresh it makes it larger. But if I shrink it down like this, you see there's more lines and stuff in there, but that's only when it breaks out of this area. When I'm scalping, I'm just looking for it to come down here, get into a play, take it back to the upside. See, my blue line was there, so on the 1-minute time frame, we actually came down to the right area and shot off and went higher. So we wouldn't have quite got, we would have got like 575. I'd rather wait for a bigger trade. But right now, we're still trending up overall, as you see on the 1-hour time frame, but we're trending down in the current time. But look at how far we've come from even Wednesday the 4th in the morning at, even yesterday afternoon at 1 o'clock, we were way down here. In the morning at 10, we were way down there. Look at how far we went. You're talking from 72 all the way up to 92. That $20. All the way up to 601.02. So that $30 run there took us way higher. So the 1-minute time frame is what we're bouncing off of right now. I'm sorry, the 5-minute time frame is what we're bouncing off of right now. The 1 minute 200 EMA is what we're ejecting off of. The 15 minutes 200 EMA is way down here. So I'm really looking for us to come down here, which that'll make this a very different trade. Let me do that. Let's plan for the future and let's put our trade right here. Let's put in 1, buy 2, click trade. Check this box, check this box. And then we're going to take profit. We're going to put it at $1,500, which will put us right there. And then we're going to click on buy. And that's just to set that trade up for later. So if we come all the way back down here, that's a great trade off of the 200 EMA for the 15 minute, giving us all this space to pull it down. So we're going to leave this trade open and this will be our trade for the day. And we'll see how that goes. If we get close to it, I'll come back in here and start up another video. But for now, that's it. This video is more than long enough. You guys have a great morning and I will catch you in the next one. I'm going to head on out to work. Ha 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 ha.